How to recover after bankruptcy. Life after bankruptcy can be daunting. It can be embarrassing and dangerous for your credit standing. However, with a fresh start, things can be changed drastically. If you follow certain things and stick to your plan, you can bounce back regardless of how much you are affected by bankruptcy. Well, this video is all about some of the practical steps that you can follow to recover after bankruptcy. And if you follow these steps, you will not only recover from bankruptcy, but also it will restore your credit in just a few years of filing. Before these steps, you must know what or how much damage you are going to undo. Bankruptcy is the most damaging thing that can severely drop your credit score. It will stay as a negative mark in your credit history for up to 7 or 10 years. Well, it depends on the type of bankruptcy you file, whether it's a Chapter 7 or Chapter 10 bankruptcy. The good news is bankruptcy does not wipe out your complete credit history. According to credit experts, it takes around 2 to 3 years for a person to restore his credit after bankruptcy after following the right steps and forming good financial habits. Research shows that, within a year after bankruptcy, around 43% of people who have a bankruptcy in their records have a credit score of 640 or more than that. And in just 2 years, this percentage increases up to 65% of the people with a credit score higher than 640. To cut the story short, the more disciplined you become, the quicker you can recover from bankruptcy. Now, let's have a look at these important steps that help you regain your credit score and help you in recovering from bankruptcy. But before you learn about how to recover after bankruptcy, pay attention to the big red subscription button. As soon as you click it, you will be taken to the wealthy side, the life you deserve, where you'll find hundreds of videos. These videos contain the answers to almost any question you may have. There are also daily updates, so if you want to stay tuned, remember to turn on notifications. Number 1 is examining credit reports. This is the most basic step if you want to start the journey of recovery from bankruptcy. You must understand the situation that currently where your credit stands. Make sure to check your credit reports thoroughly and find if there is any anomaly in your report. If you find any contrasting entry that you don't know, make sure to dispute it for correction. Well, this process might be a little different according to the type of bankruptcy you have filed. So, it is highly recommended that you should examine your credit report monthly, and this should not be a once-in-a-while thing after bankruptcy. Rather than ignoring, you must check all the activities you have done, like paying bills, are correctly reported to the bureaus. Keep in mind, recovering from a worst-case scenario is not just limited to doing the right things, and it becomes your responsibility to assure that these things are reflected on your credit reports. Also, remember that getting your credit reports may cost you a little bit, but you're entitled to a free credit report on an annual basis from 3 major credit bureaus. If you want to get credit reports more frequently, you will have to pay a fee. Number 2, monitoring credit scores. If you are not monitoring your credit score already, then register with a platform that allows you to monitor your credit score. There are some apps like CreditWise or the My Credit Guide that allow you to check credit scores for free. The credit score might not show a pleasant picture. However, it depends on the period when you have filed your bankruptcy. And if it is not much older, there is a strong possibility that your credit score may not be at the lowest level. When you file bankruptcy, it will have a drastic impact and can decline your credit score, but in the case of Chapter 7 bankruptcy, it can have a more substantial dip continuously until the court discharges your case. This process can be several months. On the other hand, in case Chapter 13 cannot be discharged until the repayment period is not finished, which is approved by the court. Well, seeing your score in the poor territory is not easy to face, but when you face the problem, then you will be able to start your credit recovery plan. Number 3 is taking help for mortgages and car loans. To gain control of your current situation, you have to get some help if you want to get a car loan or a mortgage. So, when you are going to purchase something bigger with debt, then you have to take help from another party. It can be your parents who can co-sign the loan. Because bankruptcy on your record can stop you from getting these loans for buying a house or a car, it may be impossible for you to obtain financing without it. But this can help you some favor, like you will be able to get decent terms on your loan. Keep in mind these things also depend on the co-signer's credit score, so make sure to have a person who has a decent credit history. In case there is no credit, then you will have to wait until you will be able to pay for these things with cash, or else you might go for a personal loan from your friends or relatives. In addition to that, you can have an issue while purchasing a car because the insurance shows hesitation for insuring you when you declare bankruptcy. You can have a chance with the companies that offer car insurance, but they charge more if your credit history is considered to be a high-risk pool by the insurers. To cut the story short, you can take out mortgages and car loans, or you can go for personal loans, as these ways can be more beneficial for you to recover after bankruptcy. Enjoying till now? Please hit the subscribe button now, like, share, and comment. And yes, keep watching. Number 4. Start rebuilding your credit. Well, this might be a significant step if you want to recover quickly. You can start rebuilding the credit even during the bankruptcy, as it's essential to revert things as soon as possible. And you can effectively do this when you have a solid sense of your credit in mind by monitoring and checking your credit reports. You can rebuild the rebuilding process by reviewing the factors that determine your credit scores. To do that, you will require a credit card, and you have to use it wisely, as this can help demonstrate to your lenders that you can be managing your financials responsibly and you are keen on building your defective credit history. In case you find yourself having your debt accumulating again, then you should stop using your card instantly and initiate a repayment plan. More importantly, go for a prepaid credit card or debit card until you can liquidate your regular card. Furthermore, remember that the interest rate on any card that you can get will have a higher interest rate than your average credit card. Besides this, it is also recommended that you should go for a secured credit card. This can provide you with a conducive environment for recovering after bankruptcy, as secured credit cards do not require traditional credit checks. If you want to get a secured credit card, first you have to deposit some cash, which is considered a fee, and its sum generally becomes your borrowing limit. So, if you fail to pay your dues, then the lender will be able to take the deposit. However, if you use this card responsibly and make your due payments on time, then you can make a positive impact on your credit report. Moreover, you can also take advantage of the offers on credit cards. When you show a positive intent by making positive payments through a credit builder loan, you can start getting offers as well. Number 5. Start saving and keep a bank balance. Having a checking account and a savings account is also essential. Also, if you maintain your accounts at regular intervals, it can be impactful, because you might not be able to open a new checking account if you have a history of charged-off bank accounts. Fortunately, people in this situation can take advantage of second chance programs offered by many banks. And when you keep a positive balance in your accounts for a long time, it will show your creditors as well as employers that you currently have a steady cash flow. In addition to this, it is important that you also save a portion of your income to save money for an emergency fund. The emergency fund generally covers the period of 3 to 6 months in case you lose your job, so that you can afford your living expenses. This is all good in all aspects, as an emergency fund will not only help you in emergencies, but also help you to avoid any worst financial situation like bankruptcy. Number 6 is to pay your bills on time. This becomes compulsory if you have just gone through bankruptcy, so that you pay your bills on time. Also, you must stay current on all your dues and payments so that your credit history can stay unflawed. In this regard, you might not have any room for even a little amount of backsliding or get late. It implies that you have to be attentive to your expenses so that they cannot exceed your limit to afford. This is super important because the payment history makes up 35% of your overall credit score. It can be the most significant factor in the calculation of your credit score. Additionally, you can set automatic payments through some apps or banks. In case you are not able to track your payments on time, using budgeting apps can also help you to stay on top of your expenses. Number 7 is maintaining a job and a house. This only applies if you don't have a job already, but in case you don't, you must find a job for yourself. Well, having a decent place to live comes second if you don't have or lost it in any case. The reason why having a stable job and residence is important is because it shows your creditors that you are reliable. Many landlords have started checking their credit references to screen out tenants who have a bad financial history. If you don't get an apartment on rent, then you have to adjust yourself with a relative or friend so that your credit can improve in the meantime. Not just employers also request the background of their potential employees and their credit scores to measure their responsibility. So, you must try your best to get a job and a house after the bankruptcy, as this might be the foundation of putting it behind you. Did you enjoy the video? Please hit the subscribe button, like, share, and comment.